Good morning, retail traders. This is the Sneaky Snake trading strategy where we talk about chart patterns, moving averages, and being in the now. Yesterday, I want to point out an excellent trade that I called out in the room, and it's called when the 9 crosses over the 21 and also the Megaphone pattern. So this was to spy how it looked yesterday. I've got my regular old chart up here, not the TTM this time, with the RSI crossover. So first thing out of the gate, I'm keeping an eye on 4 stocks right at open. I want to get some kind of feeling on the market and how it's doing once it breaks out in the morning. So I can more or less, after a few minutes, realize, okay, we're going to have a good day, or we're going to have a pullback day, or we're going to have a consolidation day. I could tell by looking at the SPX, we broke out right at open. So right in my heart beats, and I'm saying, okay, we're irrational exuberance already. We've already broke out from the top. And that's more or less a breakout, and I'm going to wait for a pullback and then take the trade on a pullback. In this case, we had a triple top. 1, 2, 3, she pulled back and hit the 50. But on the SPY, that's the one we're going to talk about today, talk about the crossover. And I can tell, when things are hot and when they're not. So right out of the gate, we had the 9 crossing over, and I've got 2 examples here. I've got the EMA, and I've got the SMA. And you can tell by that just by going up here, looking into studies. And I've got the 21 EMA, and I've got the 21 SMA, and the SMA is in yellow. So we start to curl up. We consolidate down here at the bottom, and we start to curl up a little bit. The 9 EMA is crossed over the SMA and the EMA. Now, I like to watch these two just to see which one respects the trend line the most. When I'm using a moving average, I want to find the moving average that respects the trend line the most. So we had the little breakout here, and we had the little double top, and she came back and she pulled back right in the morning. Well, right first thing in the morning, first thing I notice is that we have a tweezer bottom on these 2 candles, and we broke up to the upside with this big engulfing rolling pin, and she gained respect, and start to pull back. Well, that 9 crossed over the 21 and the both EMA and SMAs, and it respected the EMA. The 9 respected the EMA the closest. And she shot up. So got in the trade, or I'd talk about her. I didn't get in that trade. And then we had these 3 soldiers that came up to the top, and that was the time to think about an exit idea. We have the wicks that are up to the upside of these candles. Then we came in with a hammer, still respecting the wide gap between the 20 and the 21. The 21. And then we finally had the pullback. So this is when I shouted out in the room. I said, hey, we've got 3 black crows, and we're going to bounce off these 3 crows. So everything's about chart patterns, candlestick patterns, and moving averages. So I pointed out the 3 crows. And then right on the 3 crows, we had another tweezer bottom. That means when the 2 candlesticks and the bodies of the candle line up together, and that was the time to get into the trade. She run up and hit a 1, 2, 3. This is what I call a triple top. I use the body of the candle, and I'll run it down and hit that next body. And that stops right there. So that's the exit idea to get into these 3 black crows. Now I talk about the 3 black crows a lot. Now if you notice, the 9 started to cross down once it hit the underneath of this body right here. Then we had a body go down over the 9, and then we had this here candle disrespecting the 9 and the 21. So when she came down to the third candle, that was when I called the room out. I said, hey, we've got us a trade here. We got a Tweezer Bottom, jump in the trade. And we run up here and hit the triple top and got out of the trade. No questions asked. You see a triple top, you get out of the trade. And then, again, we had another crows. So this was a real good trading day for the SPY. There we go again with another setup. We got the Tweezer Bottom. She broke out, pulled back with a hammer, and then boom, took off. Called this trade out. Okay, by this time we started creating a pattern. Again, you notice the 9 crossing down over the 21. So that's the exit idea to get out if you think you're still in this trade. What you got here is a descending triangle. That's a bearish indicator. So you know when you're starting to get lower highs that you're starting to get a little bearish, and when the squeeze happens, we have that red candle, and that's an inverted hammer. That jumped right into the 21 SMA. Then we had the 3 black crows. By this time I was already out of the trade because I recognized the triple top. I knew that we were going to pull back on the triple top. It's just almost mandatory. When I'm trading, I count to 3. And if you can count to 3, you can trade with me. For example, 3 black crows, 1, 2, 3. And then we had a triple bottom. We had this bottom, and this bottom. 1, 2, 3. Boom, she took off. So I called this trade out. I said, we've got 3 black crows, let's get in it. Now, I described to the people, I said, when you're trading this and you're scalping, you want to try to count each crow and use it as a resistance level. So we got in here, we took the 3 crows and we run it up to the 3rd crown, to the 1st crow, got out of the trade. Then she pulled back again. By this time you've established a support. Boom, she took off and run up to the upside. Here you had 3 white soldiers, which is a bearish sign. It also is a continuation pattern. But as you can see, 1, 2, 3, get out of the trade. So we came back down and I called a put. And then we started to develop a double bottom right here. Once I started seeing that double bottom form, I called this trade out. That's a double bottom. Actually, if you look at it, this double bottom ended up being a triple bottom. 1, 2, 3, boom, she goes up to the upside. So we established, at this time we started establishing what I call a blowhorn pattern, a megaphone pattern. One would ask, why did you draw your line from here to here? Because I recognize a 2-headed snake. These are 2 heads. This is your left shoulder and this is your right shoulder. So this is called inverted head and shoulders. They call it inverse head and shoulders. It backs up and it creates a resistance level. So by this time I'm able to draw out my megaphone pattern. Took it up here and ran it up to the 200 and got out of the trade. Pulled it back down. So I'm in the room and I say, hey, we definitely have a megaphone pattern here to watch, and we got a head and shoulders. We're getting ready to have us a big knife. And I called it out in the room. I got it in the trade. She knifed. She had, again, 3 black crows. 3 hard crows. Man, I was so excited about this trade because I was actually down on it. It started going up. The pattern did, so I kept averaging in. And then she busted on down, and it was a real nice trade. So the megaphone pattern, as you can see in these diagrams, it's a pretty popular pattern. It gives a bigger volatility in the market. We're at the end of the year. We're at all-time highs on the SPY and the SPX. So you're going to have some volatility. You're going to have a lot of volatility at these levels. When you're at an all-time high on the SPY, and I really got to emphasize what I mean by all-time high. You pull up a weekly time frame of 3 years, and we're matching up here to this resistance level, and we're going to have us a little correction into January. Now, mind you, the bulls are very bullish. We've got interest rates coming down. I mean, they're seeing stuff that I don't see because I'm a private sector kind of guy and a retailer, but they're in a different world. Wall Street and Main Street, the private sector, are two different entities. We see things different than what they see. You know, they don't put gas in the tank. We do. We don't go to the grocery store and buy. They don't go to the grocery store and buy food. They're always out eating, you know, $200-300 steaks, where we have to go out and look at the prices. Nothing's come down. Inflation. They're saying inflation's coming down. Well, maybe, but that ain't going to stop the prices to come down. So that's off the subject. So let's get back into the chart. So we had the expansion pattern, and this thing, again, as it started to break out here off the trend line, she broke out and again hit that megaphone. So remember, when you recognize patterns, you got to look into the pattern. For example, we had lower lows, but we also had a tweezer bottom down here, which is a two-headed snake, which is an inverse head and shoulders. And again, we came back and retested that shoulder line. So by this time, I knew in my heart that we were going to pull back again and hit that heart. I mean, it's not ever 100%, but like I said, we're at the end of the year. We're at all-time highs. The volatility is going to be very big. What is a broadening top? Broadening top means the higher highs keep going, which someday, if you're a day trader, you're going to break that and it's going to fall on you. So you want to keep counting that broadening. You want to say, okay, with experience, you know it's time to get out of the trade. It indicates a bullish, bearish investors are battling it out. The broadening tops, bearish or bullish. While the long-term investor considers broadening tops to be bearish, the volatility and uncertainty trend to be bearish. The historic performance of this pattern makes it more desirable. So you count to 3, and that's when you're going to think you're going to have the knife. That's when you want to start being cautious. I'm going to send this link and put it in the bottom of the video. I just want you to be aware of the 21 EMA and the megaphone pattern, especially when you're into volatility and we're like at all-time highs. You're going to have people taking profit. We had this harsh sell-off right in the morning. We had a double bottom. It respected it, started the 9, crossed over the 21, which gave me a good idea. So right it open, people got out of the trade, and then boom, we had that big 1, 2, 3 right here. You get out of the trade, she comes back and she starts to form her patterns. We had the 3 black crows. We had the 3 black crows. We traded both of them. Then we had the 1, 2, 3 knife. Then we created a top. We had a triple top. Knife, 1, 2, 3. So 1, 2, 3, boom. 1, 2, 3. I mean, it's just very evident. I want everybody to have a good trading day, and we'll catch you later. Every video I do, when I'm on live, I'm always teaching. I don't charge a dime. Sometimes I wish I would, but I don't. And I wish everybody a great day. Sneaky Snake Trading Strategy, where we talk about chart patterns, moving averages, and being in the now. Happy New Year. I wish everybody a great 2024. Today's the last trading day of the month. We're going to see people are on vacation. 4-day weekend. Market closes early today and it'll be closed on Monday. Come out Tuesday. We'll see what the market tends. We'll probably have a nice little bounce and then we'll have a pullback. And then we'll have a small correction and then we'll have a great 2024.